Hey, it's James from TraderDudes.com here. In this short video, I want to show you something on the Australian dollar against the Japanese yen. If you look at your charts here, you can see that we have a triangle formation. Now, on sort of first flush, you'd think that it's a failed formation. I mean, we had a trend line along the bottom. Oh, excuse me. We had a trend line along the bottom and a trend line at the top, giving us the triangle. Now we had one that's a sort of the touch that started us off, but we had our main touches, which are 1, 2, 3, 4. We then had this break here, which was, it's essentially a failed break on this, and price has since gone to the other side. Now, what's interesting here is that if we zoom in a bit, and let's zoom in here, we can see that we've had this extremely bullish engulfing candle here. And okay, price has broken the top of it just here. So if you're entering the trade, you would probably be in it. If you're using that as your trigger to entry, if you were using that bar formation as your trigger to entry, then you would be in it and currently be in drawdown. But I'm just sort of want to cover analysis in this really, and that's if you consider this trade as like I said, if you consider this as a breakout that's failed, and therefore the probabilities are increased that we're going to break out the other side, which we have started to do here. Now this bar is exceptionally strong, this bullish outside bar, and and that carries a lot of weight when analyzing this. Now, if you look at the respective size of that bar, which is, let's see, which is, how many pips would this be? Let's have a look. About 100 pips. Your first problem area is going to occur here and then here as the previous resistance areas. Now, so the first one is let's see, these are going to disappear now when I do this, but the first one is roughly 60, so call it 50 pips away, and the next one is roughly 100 pips away. So in terms of risk reward for this trade, if you were to take it, it's quite good. You should at least get 50 pips, and you can move your stop loss to break even. Obviously your stop loss is initially going to go underneath the low of this bar here, but because it's such a big bar, if you want, you could hide it below just the low of the midpoint. But personally, I hide it behind the low to start with. It rarely ever gets hit, but there's always is that possibility. Now, okay, I think that's really all I wanted to show you on this video. I was just zooming out there to sort of see the bigger picture. In fact, let's analyze this a bit more. Let's go to the weekly. So the weekly, we have quite a substantial triangle formation. This is real kind of long-term stuff. So let's draw on this. Get it easier for you, right? So we have the top of our triangle there, the bottom there. So as you can see, we are, if you take the length of this triangle, we're really currently at the midpoint just now. We're just coiling around, so although it looks like we're in an uptrend on the daily, a short uptrend, when you look at the bigger picture, it's we're really stuck in the range. But that's long term. So this is where we're at right now. Okay, this is the triangle that I was just showing you on the daily. So it's not out of the realm of possibilities that we break this and we go up here. It sounds fantastical, but if you get that in a year, and you've a remaining 50% or 25% of your position on that, a trade like that can make your year. Anyway, I'm getting ahead of myself here, but yeah. that's all I wanted to show you in this video. Thank you.